Hello. Really pray my people are having. I know. Okay, first things first, I know I'm 10 minutes late. Forgive me. But I'm here. That's the most important part. I am here. And first things first, it is a lovely Monday morning. Very choppy market. It's going to be a very difficult day today, but it's going to be a very interesting one. This is our second lecture with our second student, and they asked four lovely questions, which we're going to try and answer as the price begins to print. So I have just 40 minutes left to kind of answer the questions, basically. So it's very interesting. I'm kind of enjoying this. I want to see if I can create a series where I answer your questions relative to my model. It's a very simple one that I've been using for 2025. And please note, I'm also a bit anxious today again. Obviously, I don't feel comfortable sharing my concepts and things I've learned over time, so please forgive me. If I do get it wrong, that's not a depiction of my models in and of itself. That's just my misinterpretation of them. And all we're doing here is studying. We might execute depending on how clean the execution of the setup is relative to what we expect within the current dealing range we're in. But other than that, I really pray everyone has an amazing, blessed remainder of the trading session, and we will get right to it. So first things first, before we get anything done, I want to get the questions in and out of the way. So the first question is time of day usage. Just to clarify, can the concept shown in the video below, in video number 1 basically, be applied during any hour of the trading day, or are they meant to be used at specific times like 3 o'clock? So this is I won't say a random time, but this is a 1 hour delivery schedule. So personally, my times can be used on any hour interval. They are prone to bring specific sequences at specific hours. That's something I won't teach. That's something only experience will guide you, and I think you should dive into that on your own. But we'll use 11 to 12 o'clock as an example. Okay? It might be a consolidation, might be an expansion. It's not that we don't know, but we're trying to anticipate. And we'll get into that as the time goes by. So that's the first question. The second one is market structure classification. Do you have a specific video where I explain or I define market structure, like specifically equal highs or relative equal highs? Because she noticed in my previous video, I noted relative equal highs, which she didn't interpret as relative equal highs, which is okay. She saw it differently. So she wants to see if it will align with my understanding relative to the criteria I use for market structure. So my market structure is, I won't say complex, but I try my level best to not explain market structure the way I interpret it, because I could be mistaken relative to my interpretation. So what I do is I look at price, very simple, liquidity and inefficiency. So for example, the first thing I do when I come onto these charts is I'll be on an hourly chart, and I told you I'll mark the previous 3 hours. So 1, 3, and 1, 2, 3, and from here the dealing range from swing all the way to swing high. Let's use it this way actually. There we go. I do think we might see lower prices, and I will lock this for now. So when I'm on a 1 minute chart, this is the when we look at market structure, what I do is I'll look at it relative to the current dealing range we're in. So relative to the previous 3 hours, this is the current dealing range we're in. And within the quadrant, the levels, do we have relative equal highs and relative equal lows? So when we're looking at it relative to this, the first quadrant, 7.5, you have relative equal highs. So this is what I consider relative equal highs, because it's within my criteria. So for example, if we had 2 relative equal highs here, technically it is relative equal highs, but the probabilities of it going there relative to my time concepts are it's a low probability. The highest probabilities are the ones that form at 75%, 50%, and 25%. So now as we come into this financial market, and this is the current dealing range I'm looking at, I'm already long. Like my bias is already targeting these relative equal highs here. So I've already formed the potential bias, a potential thesis on, okay, I'm looking for higher prices. Anything lower is manipulation for me to potentially go long at a discount price, etc., etc. So that's how I kind of interpret it. And if we're to go lower, obviously we'll take out these lows, and there's nothing you can do about that. So now the first thing I'll do is I'll mark, okay, we've taken the previous hour's low, and have we displaced in any shape, way, or form? The first form of displacement was right here. We are kind of trying to make a second displacement. So what I'm looking to see is, are we going to make an attempt to expand above this high here? And once we do, are we going to leave an inefficiency for us to potentially go long, targeting that? And if we do get any animation, then we could target the relative equal highs. So when it comes to market structure, it's pretty difficult for me to explain it from my point of view, because I view it relative to time, and that will take almost forever. But let's do this. Just show up every day, and we will read it as price begins to print, and we will look at it always relative to the current dealing range we're in. And it's always better to explain in live time over live price action, which is something you can review, etc. And if we do expand lower, then obviously half a standard deviation of the current range is what we're looking at. So all clock opened and traded higher. The first form of inefficiency is this baby right here, which we've traded into, and we've seen support multiple times. So we don't want to go long just yet. We want to see an expansion higher. We are starting 3-minute intervals. This leads to the third question. She's very interested, or I'm very interested in your use of the 3-minute intervals. You mentioned waiting for the 321, 24, 27, etc. Should I continue beyond 30, 33, etc.? She just wants to make sure she understands that it is recommended to study each 3-minute interval of 1 hour's dealing range. But if you are to trade it, do you cut yourself off like at 30 or 45, since the dealing range of that hour is gonna start a new one? So technically, every hour for me is a delivery schedule. So it's not necessarily a dealing range. And within that delivery schedule, I'll study every 3-minute interval, nothing more, nothing less. So I'm not necessarily like going to, if we are past 30, if we've hit my target, then I'm done. I don't really care what the other 3-minute interval does. But my goal is, can I anticipate a swing low or a swing high relative to time? And are we going to get to my target? That's all I'm looking for. Nothing more, nothing less. And we're always looking at it relative to time. So now currently we're just in a consolidation. We're waiting for an expansion in either direction, whether it's to the downside or to the upside, doesn't really matter. Preferably to the upside, so that we can target these relative equal highs. If we do get one to the downside, then it's okay. But what time are we at now? We're at 11:18. This is a what? It's a 3-minute interval. So the next candlestick that opens should not trade below this low. And we should begin spooling higher. And we might enter long at 21, 24. We'll see, depending on what time begins to do. So the next candlestick should open, just maybe create a wick and then begin to spool higher, targeting this high right here. Failure to do so might result in potentially lower prices. But that's what we're studying for now. And the fourth and final question, focus / study. If I could recommend one specific concept area of study, especially for ones who are serious about understanding, right here, baby. I'm going to be here every day, so you can study from the real deal. So those are your 4 questions. I think market structure is a very deep one, but we'll work on it with time. Don't be afraid. Don't rush it. There's no need for you to know that at this moment in time. The goal is to just trust what I'm trying to teach and see it in your own screen, your own time. And I'll show you how you backtest, or how I backtest, how I screenshot, how I eliminate anxiety, etc. And we'll dive into all those juicy stuff as I develop as an executor. But grateful for blessing me with your ears, eh? Sorry, these lines are a lot on my chart, but let me just remove this one for now. Then this high will have it marked. This will turn into that because it's been traded into already. This will turn into that because it has been traded to already. And this will move just to there. Okay, now my brain feels a lot better. A lot better. Okay. Thank you. So as expected, we've engineered a swing low at 18. Beautiful. So now we're expecting potential expansion. If we do expand below this low, then that expansion that's engineered here, that inefficiency, that should provide lower prices targeting this, and then ultimately a half a standard deviation. of this dealing range that we're looking at. Also be careful, we might be in a consolidation and it's okay. So the goal is, when you're studying, is you're trying to anticipate when do these swing highs and swing lows form, and when you anticipate them, do they run for a sustained period, and which one of these 3-minute intervals are the most efficient relative to execution. That's kind of what we're doing here. Then obviously you'll see me cherry pick a lot of 3-minute intervals or specific hours of the day that's specific to me as the executor, and those are the ones that I found to be very, very nice in terms of executing. So you'll also find some for yourself. So 11:21, you can, personally, I don't think it will form a swing low, just relative to the current dealing range we're in. So we can expect the next candlestick to open and trade below it. If it doesn't, that'll be lovely, but I don't think that's the case. I think we're going to trade below this 3-minute interval. But what you're studying is, you wanted to form the function of a swing low. Since we didn't take out that high, we took that low instead. So the most important PD array for me here is this one. If I'm looking at it relative to inefficiencies, it's this here. It's the most important one. So if it plays inversion, then we might look for it to carry the shorts even faster, heading into the last 30 minutes. Or this is the one that causes price to continue spooling higher, targeting this relative equal highs. So it doesn't perform the function of a swing low. Wait for the next minute. So the current dealing range we're in, there's nothing to work with in terms of execution. So it's just 33 handles. But from here to target, though, that's a different ballgame, eh? It's beautiful 90 handles, even up there. It's a beautiful 100-handle execution. I do believe we're going to hit it today. Most probably in the London session. I mean, in the PM session, eh? So this could be our first inefficiency. You can go long at 24. It's not a 3-minute interval, but you don't want it to perform the function of a swing high here. So meaning you want the next candlestick to trade above it. If it doesn't and this performs a swing high, probabilities shift out of favor, and we could see it race for these lows. So you don't want to see that. So you want the next candlestick to trade above this, trade above there as well, and begin spooling higher, racing for these, racing for that, and on ultimately these two. And the one thing I love about time, when it doesn't do what you're anticipating it to do, that's a sign of the market condition you're in, and we're in a consolidation now. So we're trying to predict the expansion. We're trying to be there once it begins to rapid reprice. That's why it's in my name. And if it doesn't do it here, you study the next hour, etc., etc. And eventually you'll find the hours that are most efficient for 3-minute intervals. And that's something you have to work hard for. So you really want the next candlestick to chase that high. So 1124 performs the function of a swing high. I would have loved this minute candlestick to take out the high, but could show signs of weakness as well. We've taken out the high, beautiful. Would have loved it to be a minute before, but so we have our first measure of displacement, beautiful. A potential measure of displacement. So what you don't want to see is this inefficiency right here. You don't want to see because 01127 traded above that swing high. So you don't want this to perform the function of a swing high. You want the next candlestick to race above it and spool higher. If it performs the function of a swing high, then we're in uncharted waters, which might see it tag these lows. And this is just a small retracement. Just don't want too much on my chart. So that's the first form of fair value right here. This is where we're going to go long. Right below this low. But we need to go long at what, a 3-minute interval. So the next 3-minute interval is just 2 minutes from now. So we'll wait for 1130 to spike lower for us to get a nice 20 handle execution, targeting these relative equal highs right here, expecting us to trade above this inefficiency. So when you study time, you have less anxiety. You could get it wrong as well, so don't be anxious. But what we're conditioning ourselves to do now is to execute with the utmost of efficiency, of course. No FOMO. You're not FOMOing in because you're not really afraid of missing anything. How can you be afraid of missing a trade if you know what time it's coming? So if you know your trade is coming literally in the next minute, what are you afraid of missing? If it runs without you, then okay, you grab the next boat, which is 3 minutes later, 4 minutes later, 5, relative to whatever model you're studying at that current time. And also when we're wrong here, we're wrong at a potential turtle soup area. So don't beat yourself up. You'll know exactly why you're wrong. It's this inefficiency that we've traded into, and we keep wicking, touching the lower quadrant, power of 3, could see race lower, and these relative equal highs are a sign of weakness. That's the only thing that can say I'm wrong or I'm offside. So if you decide to fade me, this is the perfect place to short. Perfect place to long is 1130 if it spikes below here. Then we'll anticipate that to perform the function of what to swing low. Then you can also enter on that time as well. You don't have to wait for it to grab that inefficiency, because that inefficiency could play breakaway, right there. Just the fact that it traded below that previous hour's low or previous minute's low. It's a nice entry as well. They're right there. I'll take that. Right there, we'll have a 20 handle stop, just like usual. 20 handle stop and a 20 handle TP. Only making or losing $20. And we're watching to see if it will gravitate for these highs. So right on time, right on price. If we're wrong, it's because of this inefficiency, and it's okay. Don't need to. Like the thing is, have you gotten at a potential point where you anticipate a swing low forming? and you don't want it to take out this low. If it takes out that low, then we're wrong, and we'll most probably get stopped out, and that's okay. That's genuinely okay. But we got long at a turtle soup. We got long at the smart money reversal. We got long when it's going to start expanding in one specific direction, and that's what it's all about. That's what it's all about. Did I just grab the tick low? I'm sorry. This is crazy. Let's go. Apologies. One of the best trades I've ever taken in my whole freaking life. And to do this over live price action, knowing that I'm teaching a lesson at a what the hell is this madness? So everything else does not matter after here. It has performed its function. You've entered it exactly when you anticipate a swing low forming, and oh my goodness, my brain is going to explode right now. Sorry, I haven't caught a tick low in a while. I think it's my third one this year, and it's my first one on live while with the students. So I'm proud of myself. Shout out for me. That's amazing. That's amazing. That's amazing. Just to remove all these. Sorry. That's amazing. That's amazing. I'm proud of myself. That's beautiful. I think I might move to NAS. Jokes, never. Apologies, got lost in the source. Then we are deep inside this inefficiency. We've balanced it completely. So if we do get efficiently removed, then it's because of that. So we do expect the next minute to open trade lower right there and begin to spore high. If we do trade lower below the swing low, below that, deeper into this inefficiency, then we're wrong. We will get efficiently removed from the marketplace, and that's guaranteed. So that's okay. That's 100% fine with me. I'll take my L and walk away. I hope I'm not on mute, eh? Okay. Just put this in red, just so we can see it's for lower prices in case we get them. Remove all these. I don't need them on my chart anymore. This we can keep. So you watch the market engineers relative equal highs just next to each other and begins to trade lower. So probabilities are shifting out of favor personally. So I would have loved for it to hit TP right here, or even heading into 33. So we're entering what I would call uncharted waters, and this is where experience comes in, because you can see it's a very back and forth market. So the precision elements are there, but as soon as we get to liquidity where we're supposed to take it out, it snaps back into the dealing range, or whatever the range relative to before we began expanding is. So whether it's a retracement, an expansion, could misinterpret it. So we traded into that. We can expect the next minute interval to open and just trade about this for potential turtle soup entry short, which is what I don't anticipate. So I'm just tape reading. I don't see that happening. As you can see, I'm in a long execution, but you have to be cognitive of these things, and I'm looking for potential signatures that tell me I'm offside, I'm wrong. Cut your risk, move your stop loss. But it's currently, as you can see, whenever I'm tape reading or whenever I'm in an execution, it's always a one handle, one contract, 20 handle, stop 20 handle TP, and I'm not moving anything. Over time, we will begin to move stop loss, we'll begin to add more leverage, as you guys get more familiar with my execution models and how I operate within the financial market. So I want you to notice, we just touch there, and we began racing lower. So we can, there's two things that I'm anticipating. It's this to perform the function of a swing low, which is highly unlikely because we traded a lot deeper than I wanted it to be relative to us being so close to liquidity and inefficiency. So I don't like such price action. It just doesn't sit well with me. So, but what we can anticipate is, since we're at a 3-minute interval, you can anticipate this performing the function of a swing low, which I don't think it will. I think we're going to run it, and this will perform an inefficiency for potential lower prices targeting these relative lows, and ultimately this most probably my stop loss as well. It's a beautiful entry long, though. I'm not going to lie to you. It's very nice. I felt very nice in that execution. One of my favorite executions this year. So watch it race for that low. Just hyper focused, nothing much. I'm not anxious or anything. So it's a beautiful function of a swing low, just as I'm anticipating it. But the retracement is a lot deeper than I wanted it to be. So, but beautiful function of a swing low. This would have been a nice entry pyramid, which I didn't like. I didn't want to see that. So it's okay. But this gives me signs of a very manipulated market, so it's not the best market to be in. I hope I'm not on mute. Just double check again. Very manipulated market. So obviously 20 minutes left. If within the 20 minutes we haven't hit my TPO, we haven't hit my stop loss, I will call it a day, and then I'll come and review the price action because I don't have all day. Apologies, I just don't. So the next minute interval we're studying is the 11:39. We're expecting it to perform the function of a swing low. So you wanted to take out that low there, not continue any lower, and begin to spool for that high there, and obviously that high. Very small range, eh? It's a very nice entry. Apologies, I'm still thinking about it just because it's on my chart. That was a very nice entry. That was a very nice one. It was a very nice one. On any other given weekday, that would have been a beautiful, beautiful setup. That's been a nice one. If this was a Tuesday. I had a feeling in London, if you could go through my Twitter, you'll note. So it didn't, it still stayed within the range. Nothing much to work with. If it did take out the low, it would have been lovely for a turtle soup, but it's still within the range, so it didn't perform the function of a swing high or swing low. So we'll wait for 11:42. So all these swing highs and swing lows, these are just entries. I'm giving you points in which you can trust going long, going short relative to time. That's it. And bias, all those market structure, those I can teach over time. Those I'll teach when I'm more comfortable with it. But for now, just get familiar with me. Get familiar with time concepts, because this is the real shit, man. You know, apologies, excuse my French. This is the real deal. So I enjoy it as well. It's very nice. An ideal entry as well would have been 1118 and 1121. Those would have been beautiful and would have our 20 handle model print already. That would have been lovely. So we can expect spooling higher. I think TP will hit at 1150, latest 11 or earliest 1145. 1142 if they're in my favor today. But we'll see, which is the next minute. But 45, 50. Can't say 42 if I'm lucky, because I don't believe in luck, especially when it comes to the financial market. It's basically skill, time, and price, as always. So 4 seconds left before the candlestick prints. So yeah, you wanted to take out the low first, and whatever low 1142 prints, that should be the low, and the next candlestick should begin spooling higher than that. If it doesn't do that, then it's fine. You study the next 3 minutes, so forth and so forth. So the reason I'm saying study is because I can't tell you them. If I tell you, it defeats the purpose. You won't trust them. You need to build trust in the financial market relative to time concepts. And it's very scary trusting the fact that you could be wrong in the next minute. So, and also experience will guide you into reading when will it form, when will it not. So swing low, right there. It took out the low already. Anticipate the bodies remaining within the range. If they don't, then it's okay. Wait for the next 3 minute interval. So watch the bodies, And also never forget we're in this inefficiency. So if you're wrong, it's because of that. You're just offside. And we were never going to take out these highs. We're just going to race lower. And this is a retracement. And we caught a retracement, anticipating it to be a potential reversal. That's my weakest. Not weakest, but my worst models are consolidations. Apologies, not this. This is easy. Keep your eye on 1145. Spending a lot more time in my entry than I'd like it to be, so probabilities already fall out of favor. 6 minutes till I expect TP to be hit. It's a lot slower than I anticipated, but I would have loved this to hit at 45, because if you take the expansion that's occurring, these 3 consecutive expansions, if you were to the upside, then it would have hit TP already at 11, potentially 44, 45. But it's a deeper retracement than you'll anticipate it. Most probably a power of 3. And if you're wrong, you're wrong. It's okay. And also you gotta, so 100%, we'll wait. We'll see it tag that low first. Once it does whatever low the 1145 candlestick forms, that should be the low before we begin spooling for potential higher prices. Also, the way I'm looking at it, we've touched this inefficiency right there. So just touch the lower end. That is not good. Not signs of we're going to expand higher here, but just this inefficiency right there. So 11:45 didn't perform technically any function, which was nice, but keep an eye on 11:48. Beautiful expansion lower. The most ideal short, I can't find it. 11:32 was not ideal for me. 11:41, 42 was not ideal for me, so I wouldn't have been short in any shape or form. Personally, I already see it hitting my stop, chasing these lows, and most probably a standard deviation of that dealing range. I don't see a reversal pattern in any shape or form. So what you'll notice is today, we only had a very few instances where the 3 minute intervals executed the utmost of efficiency. So this is a telltale sign for me as an executor to obviously always stay out of the freaking market. But when you study time, and for example, this 45, okay, watch this candlestick that's printing now. So it just traded above that. What time is it? 11:48. This high should not be taken. So the next candlestick should open and raise for stop loss and most probably these relative equal lows. But when you're studying these times, what you're doing is, and this would have been the best short out of all of them, if it doesn't play the function of short and we take out this high on the next candlestick, then this is a manipulated market because we're not going low, we're not getting higher, we're stuck in the range. And this is also important with time because now you also identify at which moments in time your models won't form or won't perform very specific functions that you expect to form at specific times relative to inefficiency and liquidity, which is swing highs and swing lows being formed. You can expect the wicks, no problem, but the body should remain below that low. This right here. Let me just use this candlestick. So this should be the high for this candlestick. And we should see it make an attempt for my stop loss and obviously the swing lows. If we don't do that, then we're in uncharted territory. It's going to be tough. I don't know what's going to happen then. I'm most probably wrong. So honestly, from here, this price action right there, that's everything for me here is manipulated or I'm wrong. So that's basically it. This is where I potentially most probably fell out of sync. And it's okay. I know I'm wrong and I know how I would have reversed it. And I don't want to teach that. That's not what I'm teaching. That would just make me look cool. That's not the thing I'm in it for here. It's all about lessons. Trying to find a bias, trying to find a narrative. And if you're wrong, you just sit on the sidelines, understand why you're wrong, where you're wrong, and how to improve as an executor, and how can you do better. So 11:48 didn't perform a function, 11:45 didn't perform a function, 42 didn't perform a function of a swing high or swing low. Very, very tough market. The only potential function was 11:30, which is beautiful. 25, not so nice. 24 was beautiful as well in and of itself, but not to the direction in which we're anticipating. And those are also signs as well of a heavy market. So trade setup, potentially I'm wrong. It's null and void relative to when I expected my TP to be hit. As we're in the middle of the range. We're back at entry when I'm anticipating a target to be hit. So what we can anticipate, we have taken out the high. So in this high prince, the next candlestick should open and not trade below it, or above it, apologies. When we do so, that's signs of potential higher prices. Right there. So if we do have a body close above that high, then we are going to see higher prices. If we don't, that's the last retracement for shorts. And we're just going to efficiently remove me from the marketplace, which is beautiful. I love these lessons. It's not every day you'll get beautiful wins. It's a very tough market today, I'm not going to lie to you. Very tough market. Next candlestick should make an attempt for this low, and then makes my stop loss. And we're generating relative equal lows here, which is what I don't want to see. We do have relative equal highs as well, but it's okay. So as expected, 1151 performs functions of a swing high with bodies, so we can anticipate potential lower prices, targeting that low right there. Nothing much to talk about. If you watched here, we didn't really take out that low. We did with the bodies. I watched that, but I can't really call that out. It's not something I'm teaching. So now what we can anticipate is 1157, since we've had a potential displacement. Will 1157 open, trade below that low for potential spooling higher? If not, then we'll continue to roll lower. But it's a very consolidated market. I'm working a bit too hard for $6, hey? Working a bit too hard for $20, but mental capital is being drained. But so far, so good. Not the best executions, but very important lessons here. Very, and I was a lot quieter this video than I was my previous. As my mentor would say, bag then tag, baby. Very tough execution today. I really thought I caught the tick low for the retracement, but 1 second more and efficiently removed someone from the marketplace. Very, very deep retracement. But relative to the execution we took earlier this morning, this was a lot more mentally exhausting. But let's see if we do. We'll make an attempt for these relative equal highs. But I hope I really touched on the concepts. But it's a very tough consolidation market. It's not an expansion, but the time concepts do present themselves at key intervals in time, but they are not the most optimal. And you learn this over time, and you'll learn at which times they're the most efficient, which times they form, and how, like for example, 1127 was a beautiful one. You see that? That's beautiful. 52, 51 was nice. Beautiful 30, 930 as well. It's beautiful. Swing lows, 02, 15 is nice as well. Do this inefficiency for spooling higher. Then from 15 to 27, that's a delivery schedule in and of itself, and that's beautiful. That is absolutely amazing. But other than that, I really pray you have an amazing blessed remainder of your day. If you have any questions, don't be afraid to ask some more. And if you want me to clarify on anything, please don't be afraid to ask away. It's going to take me a while, but we're going to get through this one step at a time. Tomorrow we can do again London. I'll be in London 3 to 4 o'clock hour, and we can proceed relative to the questions you have. But thank you so much for blessing with your ears, and I really appreciate you. And see you same time, same place tomorrow. And I will post a recording once, or a screenshot once we've hit these relative equal highs, most probably on my community post or something. But this is what we're targeting, and the low of the session is already in place. So other than that, let me screenshot this for my Twitter, and thank you. Stay blessed.